Welcome back to the channel. I'm your host, and today I've got my emergency market watch juice because the stock market is throwing more tantrums than my Wi-Fi connection during a Zoom meeting. We've got big tech earnings, market slides, and the Federal Reserve ready to make things interesting, to say the least. So let's dive in and break it all down in a way that actually makes sense. And don't worry, we'll sprinkle in some laughs along the way. First up, how did the market perform today? Well, it's like the market went grocery shopping and dropped all its bags on the way out. The S&P 500 slipped 0.33%, closing at 5,813.67. The Dow Jones dropped 91.51 points. Just a little Wednesday slump, no big deal. And the NASDAQ, the tech wizard of the bunch, fell 0.56% to 18,607.93. It even hit a record high earlier, only to turn around and say, "Nah, I'm good," and came back down. Let's be real. These numbers might not mean much on the surface, but what's happening behind the scenes? Investors are like kids waiting for their report cards, except instead of A for algebra, it's A for alphabet earnings. Alphabet, Google's parent company, crushed it. They exceeded expectations, mostly thanks to their cloud business. Google Cloud. Who knew that hosting cat videos and Zoom calls was so profitable? Their stock jumped nearly 3%. Imagine getting a 3% raise just for doing your job. I'd take it. But not all big tech was popping champagne. AMD, the chip maker, dropped like my phone when I'm not using a case, down over 10%. Investors were not impressed with their fourth quarter guidance. And let's not even talk about Supermicro. Their stock nosedived a whopping 33% after their auditor bailed faster than I do when someone says, "Let's do a group project." Talk about a rough day in tech. Okay, you're probably thinking, I don't own stock in these companies, so why should I care? Well, think about it this way. If Google's doing well, it's not just their stock that's affected, it's the entire tech ecosystem. From the phones we obsessively scroll through, to cloud storage for our selfies and memes, to the AI that's probably listening right now, "Hey Siri." And when companies like AMD take a hit, it could mean slower advances in tech. So yeah, maybe you should care, especially if you like upgrading your gadgets every year. No judgment, we've all been there. Now let's zoom out and look at the big picture, the economy. The US economy grew at a slower pace than expected in the third quarter at 2.8%. Not terrible, but not exactly pop the champagne numbers either. It's like when you bake cookies and they come out fine. Edible, but not Instagram worthy. Economists were hoping for 3.1%, so they were a little disappointed, probably because they really wanted that extra 0.3% so they could brag to their friends. But, and this is a good but, the job market is looking stronger than that one friend who insists on doing CrossFit. Private job creation surged to its highest level in over a year. So, while the economy is chugging along like an old car, the labor market is more like, surprise, we're hiring, which is, kind of a big deal. Now, the big question, what's the Federal Reserve going to do next? Bank of America thinks they'll cut rates by 25 basis points. That's financial speak for your mortgage might get a little cheaper and your savings might get a little sadder. If the Fed lowers rates, it's basically their way of saying, go out and spend, folks, which is great if you're in the market for a house or a car. But if you're the type who enjoys looking at their savings account balance, well, I've got some not so great news for you. Let's just say the interest you'll earn might be enough to buy you a cup of coffee, but probably not the fancy kind. Ah, yes. And let's not forget about the roller coaster that is the stock market during an election year. We've got a big presidential election coming up, and if you thought 2016 was wild, buckle up. Options traders are expecting a 2% move in the S&P 500 on election day. That's a pretty big swing, like when you try to check your bank balance after a night of impulse online shopping. Matt Stuckey from Northwestern Mutual says it probably won't be as chaotic as 2016. But you know what they say about famous last words, right? I'm keeping my emergency juice handy just in case. So, what should you do now? First, don't panic. This isn't a zombie apocalypse. Stay informed and pay attention to these big tech earnings because they're the heart and soul of the market right now. If you've got money in tech stocks, be prepared for some bumps ahead. Second, keep an eye on the Federal Reserve. If they cut rates, it's time to think about refinancing that mortgage or car loan or, buying something fancy and pretending it's an investment. But remember, lower rates also mean lower returns on savings. So if you're sitting on a pile of cash, it might be time to, do something with it. And that's a wrap, folks. If you enjoyed this video, or even if you just laughed at my terrible jokes, be sure to hit that like button and subscribe for more updates on the stock market with a side of fun. Drop a comment below. What's your take on these big tech earnings? Are you buying the dip or running for the hills? Let's chat. And remember, whether the market's up, down, or sideways, we've got your back. Until next time, keep your finances in check and your sense of humor even more in check. See you soon.